So we will continue directly with the next session, please. So there's no break right now, but we promise you a break after this session. So going directly into a little bit deeper on what needs to be done to make transparency possible, we have with us Frian Årsnes. He's a state-authorized public accountant with 24 years of experience from working with and in the extractive industries. He has experience from both private and the public side of the industry. He's an expert in extractive industries and in the taxation and fiscal design. Obviously, forensic auditing is important for investigative journalism. So please, Frian, the floor is yours.
Thank you. Everybody hear me? Okay, super. Okay, so now you have all heard from all the nice people. And in this room, there is also a lot of nice people. You have not seen much of what is going on in the world. Hopefully a lot of you will be able to do something about it, because you are either journalists or you are people that are in position to do something. I'm not one of the nice people. I'm a state-authorized public accountant. I have worked for 6 years in an accounting firm, International. I worked for 10 years in an oil and gas company, which was also doing mining operations. I've been sitting in the global tax committee of that company. The part of the company where all the transactions is approved, amongst other, which goes through tax havens. I stopped counting when I passed 200 transactions. I worked in or with more than 30 countries. And the picture is not pretty. All the people that you have heard up to now have said, or at least they are in positions where they want to know what is happening. I know what's happening. Been there, done that, don't want to do it again. That is one of the reasons why I am the chairman of the board of Publish What You Pay. There is a desperate need for transparency in the world. And I'm afraid I will probably take away a lot of your possible motivation in some of what I'm going to say. But most of you are too complacent. You have absolutely not the drive to get the solutions there. There's too much patience, too much innocence in this room. There's not enough rage. You're supposed to get out there and try to get things out in the open. And one is satisfied when you can get one crook on the hook and expose one person, one company, and you get the prize for it. You get the prize for exposing one case. How many cases do you think there are? 10? 100? 1,000? 10,000? There are millions. But there are absolutely millions of cases. How do you want to go about it? How many journalists are you going to educate? How many investigative auditors are you going to churn out? We have one of the best tax systems in the world, probably. We are not able to uncover even a fraction of what is going on in Norway. We are not even close to a decimal point in what is going on in the world. So much for the motivation. What can you do? Well, there was asked a question previously here. What is possible to do? Where is the audience? As any good journalist should know, you have to follow the money. There is no way that you cannot do that to bring out what needs to be done without following the money. That is not necessarily always following the money where it goes. It's also about following the money to who is the audience. And in my opinion, there is only one audience in the world, and that is that those that have the money invested. It's the investors of the world. It's those people that is putting money into these companies. And those people need to get the information on these companies in order for them to use their money to invest in the companies that are better than the others, but they have to know which companies are better. Today, it is impossible as an investor to actually take your money and invest in the good companies, because you don't know who's good. Because you don't get the information where they are, what they are doing, and how they are doing it. If you're going to get to a better world, you have to get that information out. And that is why transparency is so necessary. Yes, during your lifetime as a journalist, you can expose 1, 2, 10. But there are millions of transactions every year. So the question is, how many times are you going down that road where you're going to expose things? And when are you going to move in the direction of trying to get the systems fixed? That is, putting the blame where the blame should be. Not only in the companies that is doing this, but in the regulation by the governments that is allowing this to go on. The blame is in both places. The companies are saying, we do it by the law. And possibly they do. We don't know. Before they have reported publicly, transparently, what they are doing. Before you know that report, you have no idea whether they go by the letter of the law or not. So the question is, how can you do it? What needs to be done to make transparency possible? Well, it's actually not difficult. It's incredibly easy. In Norway, we are very close to do it. But currently we have a regulation which is not working. We have in place a country-by-country reporting regulation that does not work. Because of two things. When you don't pay any taxes, you don't report any of the other key numbers. Now the question is, how much tax do you think there is paid in a tax haven? Close to zero. So that means that regulation has to change. It has to include all the countries in the world. Currently it doesn't, and it's the Norwegian authorities' responsibility to fix it. The companies can't fix it. The companies can only benefit from it once it's fixed. It's the companies that is benefiting from it being fixed. Because if it's not being fixed, it's for the benefit of the bad guys. And do you want the bad guys to benefit? Is that what you want to have? Is that what you want to see? Well, if you don't want to see it, that regulation needs to change. In addition, the current regulation allows the companies to report after eliminations. Eliminations is a technical instrument that lets you hide what you have done. So what we are saying is that you need to remove that elimination and report it separately. Two things that needs to be fixed to get that regulation to be done. But it needs to be done in Norway. It doesn't need to be done in Cayman Islands. It doesn't need to be done in British Virgin Islands. It needs to be done in Norway. And for every year we don't fix it, the more information we lack. So, what's the real problem? The information asymmetry that we currently have today is giving the companies that wants to compete on an equal basis is given a competition problem. They are out-competed on information. The solutions needs to ensure open access to key information accounting information for all companies, for all countries. That's what country-by-country reporting is about, and that is what reporting of key financial key financial information country-by-country is in addition to country-by-country reporting of taxes. This information has to be in the open. It's not something that is just being reported somewhat here, somewhat there. It needs to be for all companies, for all countries. And the reason is that there is an information disadvantage between national and multinational companies. And that is what creates this unequal competition. Multinational companies are able to hold back vital information that national companies has to provide. Well, why shouldn't multinational companies report on the same basis as national companies? It's absolutely absurd that multinational companies doesn't have to give the same key information country by country as national companies. And because all publicly owned companies are seeking funding in open financial markets, and allowing some of these companies to hold back key information from these markets increases the risk of market participants to make the wrong decisions with respect to which companies get financing at what and at what cost. That is almost exactly the definition of a market failure. So, when you're using open financial markets, be open in return. And it's all about counting. In the home country, where you get market revenue, where they are maximizing cost, minimizing profits. In resource countries where you minimize revenues, maximize cost, and thereby minimize profits. And outside the global markets, in corporate havens and tax havens around the world, where you have maximizing of revenues, minimizing of cost, and thus maximizing of profits. And that is where you are able to give tax-free income to corporate people. Remember, everybody going into an international investment bank got an account in a tax haven. Do you think that that account is at zero all the time? Seriously? Do you think that? Do you think that that bank account stays at zero during their entire career? Where do you think that money comes from? From somebody that has paid tax? Sorry. Then you would be pretty naive. And hopefully you're not naive. And this is also where the corruption money comes from. Now, what is happening when you apply international accounting standards to a company structure like this? Okay? Market revenue, that's the demand side. The maximizing cost, that's the supply side, and that is in accounting replaced with the actual cost. But what happens to the rest of the structure when you apply the international accounting rules? Oops. The entire tax haven and corporate haven went away. You don't see it. Oops. You missed the countries where you're actually producing. You don't show what's going on in DRC. You don't show what's going on in Tanzania. You don't show what's going on in Chile, or in Russia, or in Kazakhstan. But, oops, you don't even show what's going on in your own country. The consolidation regulation of international companies is such that the only thing that you see is the aggregated market revenue and the aggregated actual cost. And that's it. It's the only pieces of information that you get. And this is why it's so important to get transparency rules. So you want to be journalists? Nice. So what information do you have? In my area, you have some. So multinational companies have to file, for example, with the stock exchange. You have company websites. Many countries that is not corporate havens or tax havens have business registries where you can get local accounts or some information. There is some geographical distribution, there are some segmental information. There is local bragging on what they are doing, but there is a lot of information that is not available. Almost all the subsidiaries information is not there. The company structures, who owns who, financial statements from tax havens and corporate havens, off-balance sheet companies, trusts, detailed information on special events. Only a forensic type analysis with audit type information available can penetrate through most of this information. Even investigative journalists will have huge problems actually trying to uncover this structure without leaks. How to get the information? This is a pretty good overview of what is going on. The corporate havens is the nav for the actions of the companies, and then the tax havens, the finance markets, the accounting firms, and the law firms are the things that they use in order to suppress the information, get the money where they want it to be, and then have as limited taxation as possible. Now, investigative journalism. So much for giving you motivation. It puts journalists in danger. Journalists die. Maybe not you. Maybe not the one beside you. But someone in your profession is dying to get this information out. Why do people have to die? It's absolutely absurd that you, in order to get some information, that somebody has to die. It's absolutely absurd, and all the authorities around the world needs to respect that fact, that it's absolutely absurd that people need to die to get the information. If the information is so valuable that it's worth dying for, maybe it should be in the open anyway. You're dependent on leaks. They come time and again. But again, it's not taking down the whole system. It only takes down the occasional transaction, the occasional person, the occasional company that has done it. But it doesn't make a dent in the system. Only transparency can do that. And I'm not talking about any type of transparency. I'm talking about the right type of transparency. Currently, we have transparency country by country in Norway today. But it doesn't work. And it doesn't work because it's not set up to work. It has to change in order for the right information to get out. And investigative journalism is limited in its ability to secure equal terms for companies. Forensic auditing is the same. It's incredibly costly, it needs specialized knowledge, and it's limited in its ability to secure equal terms among companies. Now, what about open reporting? That is actually putting companies on equal terms, because they all have to apply to the same standards. It's inexpensive. It's incredibly inexpensive, because the companies have this type of information available already in their consolidation. It takes approximately a couple of hours to organize this information in a multinational company on average size, maybe a day or two in the largest ones. And last but not least, everybody gets the same information to act on. All the investors, all the journalists, all the tax administrations, all the regulators, everybody gets the same information. Wouldn't that be a pretty good society? If everybody got the same information? That's nice, isn't it? You're nice people. You want that, don't you? So, the question is, would you work to get towards such a society? Is that worth it? Is it worth working towards this type of open reporting? I think it's so. That's why I'm chairman of the board of Publish What You Pay. So, when accounting is the problem, reporting on accounting must be part of the solution. Just like Ida Kreuzer that said, the banking sector is part of the problem, but it's also part of the solution. Accounting is a huge part of the problem and is a huge part of the solution. This is the type of country reporting of taxes that we currently have in the EU and Norway. Production in kind, taxes and fees, royalties, dividends, signature bonuses, license fees, shareholdings, infrastructure payments to governments. What Publish What to Pay and other NGOs want in addition is reporting of additional information. And the additional information is not just random information. It's highly specific information that you need in order to get exactly the information that you need out of these companies. You need the number of employees, and you need the investments, and you need the production by type for statistical and analytical purposes. The statistics of today in oil and gas, and particularly mining, is absolutely rubbish. Statistical information on what countries have received in volumes from some countries does not match up with the export statistics of those countries, and the internal agencies even inside a country cannot agree the amounts of mining and metals and minerals that has gone out of a country. It's absolutely absurd. We have no idea of how much we are extracting from where, when, how. Absolutely none. Revenues and cost is needed because that is leading to a number that is of high importance internationally, because it's a standardized measure across the entire industries. It's EBITDA. It's earnings before interest, tax, depreciation and amortization. It's a standardized number, and it should be reported anywhere in the world. And then the link between the taxes in the accounts should link to the country-by-country reporting on taxes. If any of these information pieces are left out, you cannot do a proper analysis of what's going on within a company. Somebody who is dreaming up country-by-country reporting can add as much as they like to this, but if they don't get this list right, they don't get the information out of the companies. So how far am I now? Another 10 minutes. Okay. My presentation will be available for anybody to download. I think all of you are able to read. That means that you will be able to see what I have put down here. How can extended country-by-country reporting or other mechanisms contribute to reveal use of third countries? Why is it important to have investments in the reporting? Why are production and revenue important? Why are cost and number of employees important? Why are P&L taxes and tax liabilities at the beginning and the end of the year important? And the nicest thing, does the OECD BEPS country-by-country reporting of tax to tax administrations give this information? No, it does not. That means that the OECD has not done their job. They've not gotten to each of the points that they absolutely need. And since this reporting is only going to tax administrations and not to the people that actually need it, which is the investors that is putting money in there, among our own nice fund, they don't get the information. Does other standards set out to give country-by-country information give this information? No. We have currently tried to look at all the efforts getting into this type of information worldwide, and none of these reportings are currently in a state where they give this minimum information. You may definitely get more, but you have to get this minimum information. So that was my last point. you have to get this information out in the open if you ever is going to have enough information about these multinational companies, and that these companies can start to compete on an equal term. Currently, companies are not competing on an equal term. Then I will shut up and people can ask questions.
Thank you, Frian. I guess there must be some energy left in the audience. I see one hand. Let's take 3 questions first and then move on. Okay, let's take you first and then show me a hand or something if anyone else would like to ask. Okay.
Thank you. My name is Inger Brodal, representing NORAD's Civil Society Department. I thought what you said on investors as the target audience was very interesting, but I was also wondering whether facts sufficient to substantially change investor behavior. I'm getting the sense that the index funds are very decisive in how many smaller investors choose to invest their money, and there's only a very small fraction of any given investor that they would want to divert from the major index funds. And so the question is, how do you change the major index funds, and sort of what is needed to have investors change behavior?
I think the investors funds are, or index funds, they are the second level investors. They are just trying to find or follow the index of the stock exchanges. It's the investors that is trying to target which companies that they are going to invest in that is likely to change their behavior. For example, we have received information both from investors and from analytical companies, which is analyzing companies on behalf of investors. And they are asking, when can we start analyze these companies based on the information in country-by-country reporting? And currently, we have to inform them that, well, currently, country-by-country reporting does not work, because it's either only tax information, or, as in Norway, we don't give all the information that is needed in order to analyze them. And in France, which has this in the banking sector, they are only giving this information for certain very large financial institutions. So there is an interest among investors to get this information. Many investors, a lot of the investors is also large funds. It's not only the Norwegian fund, but it's also large pension funds, and across US, across Europe, other parts of the world, other institutional investors, large private investors that is seeking this type of investment. And once you get this type of investors to react, then I would also think that these index fund investors would like to take this type of information into account. Because, for example, just the fact that the Norwegian pension fund now announced that they are going out, not totally out of oil and gas, but out of direct upstream companies, has generated interest in the investor society. And this is why the information needs to be out in the open. The investors are seeking this type of information, and if you don't give it to the investors who is actually placing the money that the companies are either getting directly because they are have share emissions out in the in these markets, or the companies are valued through the increases in share price, then they are absolutely open for this type of information and will pull out if they see things that they don't like. Did that answer your question?
Frian, I'm very sorry that the previous panel left without us being able to ask questions, so I'll direct one of my questions to you. And I think it's relevant. It was Hans Christian from the tax directorate who twice said that as far as transparency goes, he has opinions about what the right pace is of change, the right speed of change, and he seemed to be implying that there's a cost. There are costs to increase transparency. What do you think those might be? What are the roadblocks slowing down progress towards this kind of transparency?
I think that is more a reflection on the reality that the tax administrations are facing. When the tax administrations are meeting in the OECD connection, there are OECD countries that does not want changes, and they are seeking minimum solutions. And therefore, I think he was trying more to be on the positive side, that there will be changes somewhere into the future. We just can't guarantee the timeline for it, rather than that there are any road obstacles on actually getting through the relevant regulation. I don't think that's where the roadblocks are. The roadblocks are some of the OECD countries. Because in OECD you have to have everybody with you.
Is that an ideological analysis? It's very simple.
It's actually incredibly simple to do.
And the last question for now.
Louise Crawford from Newcastle University Business School. I was just wanting to ask you about the investors' participation. Would you advise investors not to act on information in its current form? And why do you think investors have been invited so late to the debate? If you look at consultations, I don't know the Norwegian situation, but if you look at consultations in Europe and the EU, in Europe and the UK, investors have very infrequently submitted letters to any consultations, and they don't seem to be properly involved in the development of the debate. But now it's very important that they use the information, but are using the information is not good for their decision making at the moment.
That's a very tough question. It depends on which part of the world that you are talking about. If you are talking about EU, for example, there is only tax information out there. Investors can't enact on or react on tax information alone, because if a company has paid $10 million in taxes in a country, it doesn't say anything. If their operations were 100 million, then 10 million in taxes could be quite large. If there was 1 billion in activities, 10 million could be very low. So in the EU, there is currently not enough information. In Norway, in the Norwegian country-by-country reporting, there is enough information about what is going on in the producing countries. But we still lack in Norway the third countries, and that is where the tax havens are. That is currently being eliminated through the eliminations going into the numbers, and therefore you only see part of the picture. So currently we have a situation where investors want to use this information, analysts want to use this information, but it's only partially relevant for them. Fully relevant it is when the tax havens are being reported. That is, at all countries are being reported. I still think it's still information that is being done. And why doesn't investors go out and ask for this information? Well, I think I've never seen investors usually coming out directly, openly, and participating in a hearing. It's a group of people that is acting with their money. They are not writing papers. So I think that's why they are not in there openly asking for information. Yeah. Yes.
Okay. Well, we do have time for one last question. If it's a brief question, it is. Okay. So the last one.
I'm Fanny Vollnes. I'm member of the Publisher to Pay board, but I'm also working in a trade union on national level in Norway, and a certified public accountant as well. So this is very subject for me that I'm very familiar with. But I wanted to tell about this investor focus. Of course, this is important for investors, but it's also important for ordinary inhabitants of Norway, because a lot of these services that are financed by taxpayers' money, they use these accounting rules as well. So it's a lot of money that are moved away from Norway, that are taxpayers' money, for producing healthcare, for instance, or kindergartens or schools. So this is actually as well important as for investors. It's important for ordinary inhabitants in Norway and of journalists, of course, as well. So that was just a comment.
Thank you.